If you're looking to improve your trading, you've come to the right place. So in this video, I'm going to talk about 3 ways that you can actually improve your trading right now to hopefully make you more profit in the future. There's not going to be any quick fixes, obviously. I'm not going to say do this and then you'll suddenly make 10% more profit. That's obviously not the case. And if you clicked on this video for that, then you're probably not the the right target audience. But yeah, ways to improve your trading. We're going to start with a simple one. A lot of people probably know about it, but they don't do it. And I'm going to stress the importance about why you should do it. And that is to journal your thoughts during the trading session. So a lot of people say, oh, well, I journal every single trading day anyway. But you're just journaling. I bought at this price, I closed at this price, it was this entry, it was this confluence. Trade hit TP, I made 3%. That's all you really journal. And as we know, trading psychology is very, very important. So if you're neglecting your emotional side of trading, your psychological side of trading, how can you expect to perform? And the best way to obviously learn about this is by writing it down. So a lot of journal tools will have a notes section. So for every trade, or if you want to do it individually for the session, so maybe you have multiple trades, you just want to write just for that main session, that's completely fine. The way you do it can obviously be tailored to the way you trade. If you are a scalper, it's going to be a lot more difficult to actually do this for every single trade, but you can do it just on the session. The reasoning behind each trade, what did you feel when you're entering the trade? And I feel like the most important points to actually note down are, how were you feeling when you're actually entering the trade? You know, did you get FOMO? Did you see someone else in a position so you wanted to get in? You need to identify this. Maybe you had a bit of fear of entering. So your entry wasn't an optimal one because you were scared to actually get into the trade. So you waited for it to drop into profit and then started entering. And then maybe you were in the trade and it wasn't dropping how you wanted it to drop. So you closed early, then it drops your take profit. These are all things that can alter how much profit you're making. And it's quite an easy fix that if you write it down, you're more likely to hold yourself accountable and recognize the mistakes you're actually making. Whereas if you just think about it in your head, oh, I closed this trade early. Okay, why did you close it early? That's what you need to know. It's all good knowing what you did, but you need to know why you did it and how you can actually fix that. This is definitely something that you should focus on doing every single trading session or every single trade. It's good to look back on, maybe during your winning periods, look back, okay, was I doing anything differently? Maybe you look back at your losing periods. If you just come into drawdown now, okay, how did I actually get out of this? What was I doing wrong back then? Maybe I'm making the same mistakes now. This is definitely something to reflect on as well. So moving on to step number 2. And this is, again, quite a simple one. Have set trading hours and stick to them. And this can be quite difficult for a lot of people because of maybe they're working, maybe they have to trade in the mornings or the evenings, and this is completely fine. This one's more for the people that have the freedom, they have time freedom, they can trade whenever they want. And let's say they trade in London session. With the journaling tools that are available now, you can quite easily find which hours provide my best trades, which hours provide my best entries. And if you're trading a whole session, it can be quite a few hours. So you're going to be sat there looking at setups for hours. And if you're only trading with one pair, this is obviously a lot easier because your eyes are only going to be on one pair and you can quite easily not miss setups. Whereas if you're trading multiple different pairs for multiple hours, you can definitely miss setups, especially if you're trading on the lower time frame. So by having set hours, it kind of cuts down all that time you're spending staring at the charts, looking for setups that can eventually cause you to enter setups for the sake of it, because you're just looking, kind of thinking, how can I actually get a trade out of this? I'm sat here staring for 4 hours. How can I actually get a trade? I want to actually make money. This can be quite dangerous. So let's say you see most of your setups present themselves between 9 and 10 a.m. and these trades win, whereas before or after that, the trades usually lose and you're not actually profitable. Set it so you only trade between 9 and 10. Simple as that. And you have to stick to this. If you write it into your plan, you have to stick to it. if you write down only trade London session, after London session, close the charts. Before London session, don't even look. Simple. If you don't stick to it, what's the point in testing? What's the point in having that rule? It's completely irrelevant. So if you're going to do this, make sure you actually are disciplined and you stick to what you've actually written down. Moving on to the last step, and this is to up your timeframes. And this is something I've actually been doing recently, and what I've noticed, easier to identify setups and higher win rates. Thirdly, more time freedom, but I guess that kind of is a given. So we're going to touch on those. The first one, you can obviously see setups easier because lower time frames, you can kind of get caught in mini trends that aren't really, great. And you'll see a lot of people on the lower time frames, mostly, where they'll be looking and thinking, okay, it's breaking structure now. But then they up one time frame and it's like, well, you're in a massive bullish trend. So you're kind of caught in the structure on the lower time frames, and these people are kind of not noticing it. Whereas if they just up the time frames, the setups are very easy to identify, which then obviously means that it's easier to identify a setup and your win rate will increase. Because if you're identifying setups that are easy to see and not, I guess, better setups, but if it is easier to see which setups are good and which setups are bad, the thing is with like swing trading, if you are wrong and the trade loses, you've got the whole trend wrong. It's as simple as that. So you know that if you are in that trade and it's lost, okay, maybe just the whole trend was wrong. And if the trend's right, you obviously make profit because your stop losses are quite large. The last point on that time frames was the time freedom. So if you are trading at higher time frames, you don't have to sit and look, okay, the next 1 minute candle closes coming now. Okay, is there a setup? Within an hour on a 1 minute time frame, you can have probably 100 setups. That is entirely possible, depending on how many pairs you trade and the way you get your entries. So up in the time frames, you're obviously going to enter less trades, which means you're going to spend less time on the charts. And as a result of this, more time to do whatever in your life, which can then lead you to growing other businesses, keeping fit, going to the gym, eating healthily, gives you more time to relax and get your mind away from trading. Because if you're constantly thinking about, oh, I'm in that position, oh, I actually had loads of losses this morning, it's kind of hard to actually think about the rest of your day if you are solely focused on trading. You want to focus on other things outside of trading so that your life isn't just in the charts, because that's not what we want. We don't want to just focus on the trades we've taken. We don't want to make it a whole personality and the whole reasoning why we're happy or sad. And those are 3 ways to improve your trading.